So what did I do as an investment banking analyst? I want to talk about this because from the outside in, it's not always so clear what an investment banking analyst actually does day to day. And I also want to talk about how the job has changed over time since I was an analyst, because I'm now training analysts every year and the job has changed a little bit. But to begin with here, investment banks at a super high level provide advisory and capital raising services to large businesses. Let's think Microsoft. And if Microsoft, let's say, wanted to go buy a business, they could advise on that type of deal. They could also help Microsoft sell one of its divisions. And they also help large companies raise debt and equity capital. And as an investment banking analyst, you are deeply embedded in this whole process. And I think what surprises folks is when you get to the job, you're kind of thrown right into it. And the general flow of a deal is there's pitching, where you put together PowerPoint presentations and present the prospective deal to clients and try to get them on board with doing the deal. And then once you're signed up with the client, you then execute the deal, which usually involves a bunch of analysis and working with different parties in and outside of the bank. And then ultimately you close the deal, which is the funding of a transaction, whether it's, again, debt, equity, or M&A, where dollars exchange hands. And as an analyst, you're involved in that whole thing. And really, you're the foundation of a lot of the analytical and presentation work throughout the whole process. So with a pitch book, for example, you're going to be tasked with putting together the slide decks. Now, someone usually gives you an outline of what you need to put together at the outset until you learn how to do these more regularly. But you're actually working through the PowerPoint, putting things together, creating analyses, creating charts, and then working in Excel to create various analyses. And they're usually relatively simple at the pitch stage. They're not nearly as complex as they will become later in the process. But you're cutting numbers, trying to figure out where the company's headed, making little projections, making little analyses. Those go into your pitch, and then you go pitch the client. If you win the deal, there's a lot of execution work to do, and that does vary a little bit deal by deal. If you're doing a capital raise, it's working with prospective lenders or investors. If it's a buy-side M&A process, we're looking for potential targets. If it's a sell-side M&A process, we're putting together materials to market the company to prospective buyers and then working with all those buyers. But you are really the central node in that whole process as an investment banking analyst. And again, to the point of this being a little bit shocking, you're given a lot of responsibility here. You're 22 years old and CEOs and CFOs will call you up and ask you questions, and they really treat you like a peer, and they're really asking for your guidance on certain things. And so it's a pretty incredible experience to get that kind of exposure that young. And the other thing to note is that you're moving really fast. Because you are working with CEO and CFO level executives, the expectations are high. So you're expected to be essentially perfect in your work. So you have to be fast and perfect in your work, or at least close to perfect. There's very little room for error because you're dealing with hundreds of millions and sometimes billions of dollars for a particular deal, and you can't make mistakes there because otherwise there's serious consequences. So this job can be a little bit stressful at times. You're working really fast, sometimes 100+ hour weeks, pushing really hard, but you do learn a lot and you build an incredible skill set as an investment banking analyst, and you open up a lot of doors, which I'll talk about in a minute here. Now, with that said, I want to stop and talk about how this job has changed, because it has changed since I was an analyst. And the big changes here are that the level of complexity of models for analysts has really changed over time. In the old days, you could really build just a 3-statement model and get away with that. These days, that's kind of the last thing you do, and it's the simplest part, because people build much more complex models as the businesses become more competitive over time. So the expectations for analysts more broadly are much higher. And then beyond the general level of expectations being higher, the volume of data that's available is exponentially higher, and you're often given these data feeds, or what's called a data cube, which is just a lot of data from a company. Imagine all of their sales in an Excel file or some database. You have to pull it out, clean it up, analyze it. And so you have to be really capable in Excel in a way that wasn't always the case. Now, another question to address here is, how did I break into this field? And I'm guessing you're wondering, which uncle did I call to get my job? And the real answer here is I had no connections into this world of finance, and really just had no knowledge of it, and it kind of stumbled on investment banking, very fortunately. Early in my college career, I was at West Virginia. This is back in the day. Nowadays, there are a lot of clubs at schools that allow you to break in from non-target schools, but back then that just didn't exist. And so I transferred to a new school. I transferred to UVA, and really just pursued this head on. My parents thought I was a little nuts, but I really decided I was just going to go for it. And I should note that even when you go to a school like UVA that's a target school, it's still insanely competitive. In general, you didn't get an interview unless you had at least a 3.6 or a 3.7, even at UVA. And I think that's probably changed a little bit over time. But in short, you really had to have great grades in order to break into this industry. And then beyond that, it's important to note that I networked like crazy to get my junior summer internship, which is the big internship that you want to land in investment banking. So at the time, this is back when Ken Moelis was actually building UBS. He had joined from DLJ. This is before he started Moelis & Co. The UBS story was very exciting, and I really wanted to work at UBS, and I networked like crazy to get that job, to the point that I'll never forget this, when I got to my first round interview, the guy opened the door, looked at me, and just kind of gave me this smirk, and he's like, "Hi, Mike. We know you already. Welcome." He's like, "We're going to ask you a few questions. Let's just check those off. You're going to get a second round. The job is basically yours to lose. Just don't screw it up." Because I literally taken the time to meet everyone that was associated with UBS at the time. And I received offers for higher ranked firms, but took UBS because I really wanted to work at UBS way back then. Because again, it was like a really growing franchise. It was really exciting. And so in the end, I got the summer offer. I went to UBS in financial sponsors in New York, and then ultimately received a return offer, which is a bit of a bear. Some really crazy stories on that one in terms of how maybe I shouldn't have gotten a return offer. I closed 2 deals, so I knocked out a lot during the summer. But at the same time, I slept through a presentation, which, everyone makes mistakes. I felt really, really silly. But don't sleep through presentations in your real life job. I overslept. I'd been up for 2 days straight, and I slept through a presentation. In the end, I got my return offer. I actually went out to the LA office, which is where Ken Moelis was really running UBS from the West Coast, which is now Moelis LA these days. And I had an incredible experience. And looking back on this whole thing, I would do it all over again. It was a really intense role, but it opens a lot of doors. And especially if you want to go into finance and move up into buy-side roles like private equity or growth equity or venture, this is a really critical stepping stone in most cases to get to those roles. And then beyond that, at an early age, you're given exposure to these really senior level folks. You're pushed really hard, and you build a very high level of expectations for the quality of your work and the work of people around you. And that's massively benefited me over the course of my career, not just in finance, but now actually building a business. And so punchline here is I would totally do it again. And I really think it's just an amazing career path that can open a lot of doors, even if you don't do it forever. If you want to do investment banking, you don't have to do it forever, but it can really set you up well for your career.